Hello everyone, welcome back to my channel. So this video marks the end of the week number 43 in this Road to 100k realized return challenge, and it has been a week that started very well, but ended up going in the other direction in the past few days, especially as the market started to pay a little bit more attention to the fiscal situation in the United States. The bond market has been going, I would say, quite badly because the yields on the U.S. Treasuries have been going up, and that has been also reflected in, for example, the TLT, which is the the ETF that tracks the U.S. Treasuries. As you can see here, after hitting a low in here, then it's stabilized towards the end of the week. But this is basically a result of the yields coming higher because the investors lost some faith in the U.S. Treasuries, in the bond market, and stocks were also dragged in along with this fear. And so, as you can see here, the weekly graph here of the QQQ, which basically tracks the Nasdaq, it reflects precisely that. And so there were quite a few times in which the stock dropped markedly. For example, here, and also here, which reflects basically the sentiment of the market becoming negative. Also, reinforced in some way because U.S. President Donald Trump reinforced his intentions to apply new tariffs, especially to the European Union, with a 50% new tariff on European products exported to the United States. And so the markets also responded in fear upon that threat. On our side, this was a better week than the past few ones. We managed to collect for this week about 218 euros, and I should say that we were somewhat lucky in a few instances, because as you can see, this graph, which is a weekly graph, shows quite a lot of volatility at key moments. And as you can see, for the most part, at the beginning of the sessions, we could not simply trade right away. We could not sell calls on the QQQ right away. Basically, at this point in here, we had to wait quite a long time for us to be able to input the trades without suffering any losses. The only loss we had this week was on Wednesday, here, the 21st. It was precisely the first trade we did, and was because of this movement right here, because we basically waited until this first move ended, this first move, upward move, and then right around this time we placed our trade, but then we had this big upswing, and we were stopped out of the position. And so but this was the only instance in which we were caught up, because, and coming back to the weekly graph here, we managed to dodge this the downside of this upward swing. We also managed to dodge this one because by this point we were already out of the market. And even though there was this volatility on Tuesday, we placed the stop loss quite a long way from the current price, and this was good enough for us to be able to stay in the market and then be able to cash in our options at basically no value, or buy back the calls we sold at almost no value, when the market simply turned around and came down at this point. Now, as you can imagine, these downward swings here, we were able to make some money out of them also as well, because the options we managed to sell expired almost worthless, so we could buy those back. And again, in here, at the beginning of the section on Thursday, we had to wait until this upswing was over to be able to sell our calls. And so this, I would say that this week was a week in which we managed to dodge most of the bullets, because if we monitored the market less accurately, and we would place our trades with less in a less timely manner, and so if we just put those trades in and not even think about what the market is doing, we would have come out with repeated losses this week, which uh, fortunately did not happen. But we'll have to do the same next week. I expect that next week there will be a lot of volatility as well. It will be a shortened week. The market will be closed on Monday the 26th. So it will be a shorter week. So we'll have to see what happens. In terms of the Pfizer, the main highlight was that they apparently they signed a deal with 3SBO, which is a biotech company from China, and this has the benefit of providing additional payments to Pfizer, and so this bolstered the stock a bit at the beginning of the week, but then it subsided, and it did a U-turn and came all the way down, and then recovered somewhat over towards the end of the week. So a week of a lot of volatility as well, a lot of ups and downs, and so in a way this is good for us, because when we get some more funds to sell some puts, we may be able to buy some more stocks and lower our average price, which is good. And in terms of our calls that we sold on Pfizer, they are still here. This one will expire in 2 weeks, and this will expire in 3 weeks. And I'm pretty sure that this price of 27 will not be reached anytime soon. And so it's up to us to lower the average price that we have, which is around 26.50 something. And so, or 26.20 if I'm not mistaken. Let me see. So yeah, 26.21. So we will have to wait, because I could not sell any calls at 26.50, because these were simply not available when you extend the maturity to 3 and 4 weeks onwards. At this point, for example, yeah, this was the option chain, the way it was when we did the trade. So you see here 27, or it jumps back to 26, so there is no 26 and a half, for example, as it is in here. And so yeah, basically we had to go for the 27, but this for sure will not be achieved, and so we will have to roll over these calls when they reach the maturity. So yeah, this is where we stand at the moment, and we will have to wait a few more weeks to see if we can finally get rid of this load of shares of Pfizer, so that then we can start trying to work on the QQQ to try to get rid of these shares as well. As a result of having accrued these premiums, we are now in a position to sell at $550 our QQQ shares to break even, taking into account that we need to recover from the loss that we had in mid-April last month. So yeah, that's the way we are at the moment, and so hopefully the next week will be more of the same when it comes to accruing those premiums and getting closer, continue to accrue to our account of realized returns in this challenge. But for the time being, this is all. Feel free to leave your comments in the comment section below, and I'm also available on LinkedIn in case you want to send me a message with any questions. And of course, feel free to like the video and subscribe to the channel, and we'll reconvene next Tuesday to start the week number 44 in this challenge, and I'll see you there.